Ambareesh Baliga, market expert. He joins in to talk about his wealth creator ideas. Ambareesh, let's start off with the first name. And interesting name is what you have right now on your list. Himmat Singh Kasir. Tell us, why do you like this one?
In fact, this is a home textile major in drapery, upholstery and bed linen, and completely vertically integrated, right from manufacturing to distribution to product development. And they have a very strong brand portfolio, especially in US and Europe. And in the last 2 years, the company has in fact come back on track and should be growing at about 20% plus. I think FY16, the turnover should be about 2,500 crores plus. And with an EPS of close to about 13.5, I think this stock can easily go to levels of about 150, 156.
Let's talk about the second idea then, and that coming in on Mahindra Holidays. Now, there seems to be a little bit of a concern, Ambareesh, with respect to the membership addition. That's 68% of the revenues. Do you believe that this is going to be a little bit of a dampener, or you think that the long-term prospects seem intact given the kind of strong operating performance also?
No, I don't think that will be a dampener, because one needs to see as to how this company has grown in those years of FY04 to FY08, when the markets were booming, people wanted to spend. And I mean, that again, we are comparing with the last 4-5 years, which were quite dull. So last 4-5 years, they grew at about 13 to 15%. But the way I see going ahead, the next 4-5 years, they should again come back on track and see the sort of a growth which we saw in the last decade. So if so if they even start growing at about 30-35%, I think the scenario is going to be completely different.
Sure,
and again, I mean, a company like this has a very unique sort of a business model. They in fact create assets out of the customer's money and not their own balance sheet. So if you look at the balance sheet, there's hardly any debt. And this property also becomes their property in 25 years. So in fact, you're getting the property free. So, I mean, looking at the long-term prospects, clearly at these levels, it's going extremely cheap, because this company has not really participated in the last 6 months rally.
Okay, watch out for Himmat Singh Kasir as well as Mahindra Holidays, says Ambareesh Baliga. But Ambareesh, stay with us. I just want to mark Sun Pharma. Take a look at the crackdown on that particular stock. It's succumbed to a significant amount of selling pressure as we speak, as is the case with the rest of the market as well. While we are tottering around the support of 80-50, that Sun Pharma in trade 2.5% lower. Even high flyers like Tata Motors are now cracking, what, almost 3 to 3.5% apiece. But Ambareesh, we've got a viewer query as well in for you to solve. Today's query is from Raj Kumar. He is an investor. He joins in from Hyderabad. Raj, hi, afternoon. What's your question for Ambareesh?
I have 100 shares of Escorts at the rate of 76 rupees, and I have been holding it since last 3 years. So now I want to know that whether I should continue with this holding, or I should switch into some other auto stocks.
Ambareesh, come in here on what exactly you would be advising Raj. It is certainly a promising stock. He's been holding on for quite some time. What do you think he should do now?
He's got a lot of patience holding this stock for the last 3 years, and especially the last, I think, 5-6 months would have been a bit tough for him, because the rest of the auto stocks were moving up, except Escorts, which just started moving up about 2 months back. And now it seems to be on track. So I don't think he should be exiting at this point of time. I still see an upside, I mean, at least to the levels of about 180, 185. And looking at the future prospects, I think he can just, I mean, continue holding, because it is just not tractors where, in fact, I mean, there are talks of a JV. In case that comes true, possibly that could be one trigger. They have land to sell, which again could be another trigger. And at the same time, the other divisions, auto ancillary and railways and construction equipment, I mean, all these should in fact do extremely well over the next couple of years. So I think he should just look at holding on. But then again, like I said, my target for the next 4 to 6 months is about 185, 190.
Ambareesh, so good chatting with you.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.